Hi, good afternoon, everyone, and thanks for joining today's Facebook Live. I'm Vanna Kier, the Senior Advocacy Manager here at Prosperity Now.
Emanuel, Senior Policy Manager at Prosperity Now.
Great. So Emanuel and I are here today to talk about everything that's been happening as it relates to consumer protections. Over the last 2 weeks or so, there's been a number of things circulating, whether it's related to the payday lending rule or the huge banking bill that was just passed in the House. So Emanuel and I wanted to take a few minutes to talk about those things and specifically talk about what they mean for you all. So for starters, Emanuel, the payday lending rule, a huge deadline recently passed with that. Talk a little bit about what that means.
Sure. So a few weeks ago, Congress and specifically the Senate ran out of time to use an obscure but powerful law to basically permanently repeal the CFPB's payday lending rule, the rule that they published in October. Mm-hmm. And so because of that, the rule now continues moving forward towards the implementation phase, which is, towards the implementation phase and towards its effective date, which is next summer of 2019.
Okay, and just to back up a little bit, when we talk about the payday lending rule in itself, talk about what that rule means for consumers.
So it means a couple of things, but at a basic level, it means that for the first time, this rule provides nationwide federal protections for borrowers who take out payday or auto title loans. A handful of states have protections throughout the country, a handful of states don't, but this provides kind of a level playing field from where states that don't have those rules can have those, and the residents of those states can enjoy them, and the states that do have them can use this kind of, to boost the protections that they already have. And so what it does is a couple of things. One, it provides, expanded disclosure requirements for folks who are taking out these loans so that they know what they're taking out and understand the terms. It also provides some protections against protections around how a lender can interact with a borrower's bank account. Mm-hmm. And then the biggest one is that it requires lenders to assess whether or not a borrower has the ability to repay their loan. Mm-hmm. So currently, the way that payday loans work is that someone will walk into a store, go online, fill out a form, fill out an application. They will get the loan regardless of whether or not they can pay it. Mm-hmm. And so from there, what happens is a cycle in which the borrower will come back or will pay the loan, whichever way they kind of are able to. They'll find themselves without enough money to pay their obligations, and the lender will happily provide them another loan with additional fees, and that'll just keep going, tacking on. And over time, that just increases the size of the loan without a borrower being able to pay this down. So what the rule does now is puts an end to that by requiring lenders upfront to determine whether or not this borrower can take out the $100, $200, $300 loan and be able to pay all their other obligations as well as her loan.
Mm-hmm. Good stuff. So with the deadline passing, obviously a big victory for consumers, but at the same time, we also know that acting CFPB Director Mick Mulvaney has talked about his intentions to revisit the rule and possibly make some changes, as well as he's currently reshaping the agency as a whole. Talk a little bit more about what he could potentially do to change the rule and what he's doing at the CFPB.
Sure. So. On the rule, he has already, even before this deadline passed in Congress, he had already made an announcement that he was going to direct the agency to revisit and possibly reopen the rule for public comments. And if that does end up being the case, what we expect will happen is that it'll be a process in which it is likely to lead to a revised rule that is much more weaker than the one that passed in October. And so, it won't be repealed, but it'll be ineffective for what it's supposed to do. Mm-hmm. That's one. And then two, when it comes to the Bureau itself, this is part of a broader strategy, a broader agenda that the acting director has. He has been looking for ways to kind of reduce the Bureau's power from the inside. And so what that's led to has been announcements like the payday rule announcement, also announcements requesting additional information from the public about various aspects and components of the Bureau, as well as rebranding the Bureau. So, if you see some of their more recent statements, you'll notice that it has a very government-esque logo now instead of the CFPB logo. And at the same time, the acting director has rebranded the agency to be called the Bureau of Consumer Financial Protection.
Try saying that
BCFP. And this is all part of a strategy to just make an agency that has been one of the most effective government agencies, relatively young agency, seem like any other government agency, a very dry, bureaucratic institution, which would then allow, for efforts to dismantle the Bureau from Congress, from inside, without a lot of public opposition.
So certainly things we'll be keeping an eye on over the next few weeks and months. I do want to shift gears a bit, and I know we talked about the banking bill as one of the more recent developments. Talk about what happened there with the banking bill that just passed the House. What's in that bill?
Sure. So the banking bill that just passed the House is the same bill that went through the Senate a couple weeks ago, maybe a month ago. I think we might have had a video on it as well. It's a big piece of legislation. It has bipartisan support. But this is, this represents the first successful large-scale effort to roll back some of the protections that were put in place in the immediate aftermath of the Great Recession. So protections established through Dodd-Frank, which established the CFPB and a handful of other things that the law has led way to. There's a lot of rollbacks there that really, specifically speak to financial institutions and how they interact on the back end. So not necessarily, you may not approach a bank. I mean, you may not see the results of this legislation play out, but on the back end, financial institutions have, restrictions have been lifted on them on how they operate and how they do certain businesses. At the same time, the bill also includes provisions that would roll back specific pieces of Dodd-Frank and specific pieces of work that have come from Dodd-Frank, such as rules established recently to protect borrowers of manufactured homes, so mobile homes, from being steered into high-cost products or being taken advantage of as they're trying to pursue their American dream. And then I think the one thing I think folks should really keep in mind is that this bill exempts about 85% of financial institutions from the country from having to report who they're lending to when it comes to mortgage lending. This is huge. Leaving 15% of the banks to do that work is a big problem given our history of racial discrimination, particularly in fair lending, history of redlining, and the fact that people of color currently have a lower home ownership rate and are discriminated at 1 to 2 times more than a comparable white peer. Having this data not be required and not be shared from the banks to the public will mean that a lot of this discrimination going forward will just go unseen. And so it's going to be a real problem for advocates who care about fair lending to be able to address, because the data just won't be there to support some of the things that we know are happening on the ground.
And I would imagine with this sort of attack on fair lending that happened through S2155, there will potentially be more legislation down the line that will impact fair lending, just as this one.
Yeah, possibly. I'd say it's not just from Congress, but also from the Bureau. So one of the other things that Acting Director Mulvaney has done is that he has I think reshuffled or reorganized the Office of Fair Lending under his own office. So it's not independent of the director, now it's under the purview of the director, and that's just another way to get at fair lending and reducing the protections that have been put in place since the recession and have been around for quite some time.
So certainly a lot happening with consumer protections, with fair lending, things that we at Prosperity Now will be keeping a close eye on and letting you all know how you can take action and reach out to your members of Congress to raise your voice on. If you're not already a member of our Consumer Protections Campaign, I would recommend that you sign up today, right after this Facebook Live. Just go to prosperitynow.org/take-action and sign up for our Consumer Protections Campaign. We'll keep you posted on payday lending, CFPB issues, other banking bills that come up for the remainder of the year. So with that, thank you all for joining our Facebook Live. Thank you, Emanuel, as always, very helpful information, and you all have a great day.